Thank you, President Reisling, members of the board, Dr. Wise. It's always a pleasure to talk finances with our public and with you. So at this point, I'm going to talk to you about, there's 3 different reports that we generally discuss at board meetings. We talk about the 5-year forecast. We do that in October and in May. We also do our budget summary every year. We talk about our new budget for the fiscal year. I do a document called the CAFR, the Comprehensive Annual Financial Report, which is 152 pages, and it's in draft form right now. We're finalizing this right now, but it's very technical. It talks accruals. It's done under GAAP rules. There's a new pension note called GASB 68. If you want to know all about that, I can explain that to you. But otherwise, if you don't want to hear about that, I'm going to talk to you about an annual financial review that's a little bit shorter in form. You may remember when we did our performance audit, the performance auditors asked us to do something called a PAFR, a Popular Annual Financial Report. Mindy probably agrees there's probably no annual financial report that's popular. So I just shortened it to an annual financial report. What this report does, it just really shows you where our monies came from for the school year, how we spent them. It also talks about all of our funds. A lot of times, like in our 5-year forecast, we talk about our general fund. This one talks about every fund, every dollar spent within the school district. And at the end, I wrap it up with a little comparison with where we stand in Franklin County. So to talk about our general fund revenues first, if you compare fiscal 14 to fiscal 15, we were up roughly 7%. The graph that I put, the pie chart up on the screen up there, just really shows you where the bulk of our money comes from. It comes from really from 2 sources, real estate and state funding. If you look at our real estate proportion last year, we were roughly at 40%. This year we're at 39%. We did have growth in real estate. We grew about $3.3 million in our real estate collections. However, state funding, we had growth of $11.5 million, so our percentage went from 47% of our overall revenues to 49%. So proportionally, state funding is starting to outpace our real estate taxes. The reason being, we do have we're growing in students. The state has put a few more dollars into education. When you look at our tax base, our assessed valuation has stayed pretty constant. Therefore, the amount we receive in taxes has been pretty consistent. I would contribute most of our increase in our real estate taxes last year to the casino. That was a nice plus for our school district as far as our tax base and receipt of additional dollars. Expenditures. When we're looking at expenditures, on the expenditure side, something that really sticks out this year, if you look at other expenditures, you can see it was up to $11 million, or 11% of our overall expenditures. What I want to point out, at the end of last school year, and you'd have seen this on the forecast when I presented it, and it's in the assumptions of the forecast also, we were a large portion of our way through our construction project. The way the state operates, the way the Ohio Facilities Construction Commission operates, is we have to spend the money first and then ask for reimbursement. At that time, we had 5 buildings that we were opening up in the fall, and we had 4 more under construction. And our overall $124 million state share part of the project, they owed us $21 million at the end of last school year. So the general fund had to advance the construction fund money so the purchase orders could be put in place to construct the 4 new buildings. Because that happened, we had a cash shortfall in our capital projects fund, which I'm going to talk about here in a little bit more detail in a minute. So that advance, when we opened up the fiscal year in July, we advanced that money right back. So that's a one-time thing that happened. You'll generally see each year we'll do that with grant funds. Grant funds from the state work the same way. We have to spend the money up front. So at the end of the fiscal year, you can't close a fiscal year in a deficit in any fund. So your general fund has to advance the money, then you just receipt it right back the next year. So that's a little bit of an oddity that other expenditures, which generally runs around 3%, was up to 11% last year. Consequently, what it did to our instruction lines, if you add up our 2 instructional support and our instruction, That generally is about 73 cents out of every dollar goes towards instruction. You'll see on last fiscal year, because of that large advance, it kind of skewed the numbers a little bit, and it took it down to 67 cents out of every dollar was spent on instruction. If you take that large advance out, it was back up to 72%. So we're right around that same amount. I just wanted to point out that that was a little bit of a misnomer. When you're looking at our figures from last year, that's something I think it's important to point out. Expenditures by fund types. We have several other funds. We have capital project funds, special revenue funds, we have debt service funds. Each one of these funds is required through governmental accounting to do specific things. One that I want to point out, you can see the biggest part of the pie chart up there is capital projects fund. It's 56% of all of our other funds were spent on capital projects. We had $116.8 million spent in our capital projects fund last year. That's over $10 million a month we were spending on construction. If you think about that, with the 5 buildings that we opened and 4 more starting up, and then a little bit of runoff of the first 4 from phase 1, we were really busy in our office, and Mark was really busy as well, getting these projects going and underway. It was a really aggressive schedule that we put together, and I think this chart really replicates and shows how that was allocated in our resources. A lot of money went to our capital projects. We also, even though we had the large Ohio Facilities Construction Commission project, we also did over $4 million from our permanent improvement fund in asphalt, roof projects, other things that were going on in the district. So there was a lot of focus put on those as well. And you could see, as you went around the buildings this beginning of the school year, everything looked in great shape. Everything was really nice, and I think it was a testament to our Property Services Department, and Mark Waller especially, that even with the big construction project going on, we still had time to allocate to get the other projects done. So that was a nice plus, too. But the result of that is our capital projects fund, you can see, we're very heavily weighted towards that. Normal years, you'll generally see our special revenue funds a higher percentage of our other funds. Those are our Title I funds, our IDEA, special ed, Head Start, all those type of special funds that we have. That would normally be the largest number in this, largest percentage in this group of funds. But because our capital project's going on, that's why our spending was on that level. I don't have a slide for this, but our cash balances are on target still, roughly 6 months of operating expenses in our coffers. We feel that's a good, prudent reserve. That helps us when state funding goes up and down or other things are going on in the district, that maybe we have some opportunities to do some things with those funds. We also aren't stretched and worried about where we're going to be in the near future. As I stated in the forecast in October, we're in great shape there. Not looking for. We have a positive cash balance throughout the whole forecast. Last but not least, the Franklin County comparisons. A couple things I wanted to point out with this. First, on the expenditure side. If you look at where we stand, and this is all fiscal 2013-14 information, we haven't received the new information from the state of Ohio yet. So all the information, Southwestern's and all the districts up here, is fiscal 13-14. We were 11th out of 16 in Franklin County as far as what our expenditure per pupil was. The average in Franklin County, if you look at all 16 districts, is $11,854 per student. So Southwestern is about $1,500 less per student than the average school district in Franklin County. If you multiply that by our 20,000 students, that's over $30 million of expenditures that our taxpayers, I believe, are saving because we're prudent with our resources. The state average is $10,913 for that same time frame. That's about $530 less per student, and that equates to over $10 million of expense that we are not incurring if we were just at the state average. So those are good bits of information for us to know and for our taxpayers to know that we're being good stewards of their money. Millage rates, I won't talk about those a whole lot right now. As you know, your tax bill should be coming soon. We have certified our rates with the Franklin County Auditor as far as our bond millage goes. We want to make sure that those are all correct, so that's part of the process we go through with the Franklin County Auditor. Each year, we look at what our debt requirements are, we look at our cash balance in our debt service fund, we have a conversation with the Franklin County Auditor, each treasurer in the county does that, and then we set the bond millage rate. That information, along with all the assessed values, goes on to the State Department of Taxation, and then they provide information back to the counties, and then the tax bills can go out. I don't believe there will be a delay as there was last year. If you remember, the county auditor and treasurer had new software, and there was a big delay. And hopefully that doesn't happen again. Last year, we were short about, in the month of January, we received tax advances. We were short about $20 million that we normally receive, and weren't able to invest that, and weren't able to have that for current expenses. Luckily, we do have a cash balance. When I talked about that cash balance that we need in reserve, that's a good reason why to have that reserve. If we did not have that reserve in other years, that could have caused a district like ours to maybe have to go into some sort of short-term borrowing, which would have cost us interest. So that's a blessing to have that cash balance on hand for situations just like that. So I don't anticipate that for this upcoming tax collection season. Try to give you a lot of information in a short period of time. Once again, this document, 6 pages, pretty easy read. For the 152-page version, if you want that, this will also be on our website soon when it's finalized with the auditor's office, and you'll be able to read that as well. Pretty exciting stuff.